than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy. I make it rain dollars, they watch me disappear. I'm so fly, man, I'ma need some land again.
Hey guys and girls, welcome to this week's episode of the No BS with Birchy podcast. I'm your host, Nathan Birch, and this is the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Guys and girls, I can't fit all these news articles onto my Tuesday night lives. If you've been watching them, great, I'll keep them up. If you haven't been watching them, head over to Facebook. On Tuesday nights, the facebook.com/binvested.com.au, where you can see me go live on all different various topics. I've made it my thing where each week I'm bringing you news articles, sharing with you my interpretation of what's happening out there in the news. And there's literally too many different bullshit news articles coming through, and it's important to go for a deep dive through this and investigate it. So if you haven't seen last week's or the week before, been talking about the power crisis, been talking about lack of coal, been talking about interest rates, been talking about all different things, go back and have a check out for those videos. Today's first article here is the next company going bankrupt here. So it says here, fears Victorian construction company Snowdon Developments may collapse next. Customers and creditors are worried about another construction firm about to collapse, leaving them millions out of pocket. Consumers and creditors are concerned the Victorian construction company might be about to collapse after it racked up millions in debt and building works have stalled for months. This is happening every single week. There's a different building company going bust, a different developer going bust, and this signals a massive, massive issue. Everybody's fearful. Here we are, we've got some photos if you're watching this or whatever. Like people's developments, their builds, their houses, their dreams are falling apart because they're not able to get the property delivered that they've paid for. So just as a bit of a recap, if you haven't heard me talking about the interest rates, I've been going on about the interest rates week after week for the last sort of 6 weeks since I started increasing interest rates. Very, very basic. Is that if these rates keep going up, we're going to have massive, massive flow-on effects, not just through the property sector, but through all different markets. We've got here companies that have got debt based on a bank bill swap rate. So basically, after doing a bit more research into it, I feel like about 70% of the world's debt is based in commercial terms, not in consumer terms. So whilst you might have a house with a 4% interest rate and it might go to 5% or 3% that goes to 4%, whatever your interest rate is, it might rise a little bit. If you're a business, you were paying next to nothing to start off with, and now those debts are accumulating and rising very, very quickly. For example, when the interest rate was 10 basis points and they had a 1% premium, you might have been a business paying 1.1% interest. Now the interest rate's gone up to 1.35 by going up 0.25%, you'd be paying 1.35. Interest rates now gone up to 1.85 because it's gone up to 85 basis points. That's basically in 6 weeks, the interest rate has gone up double in 6 weeks. And if it goes up, which it most likely will go up for the next couple of months, that will go up even higher. We've got businesses falling. This is very, very important because we will head into a recession very, very quickly. I've said for many, many years, I did a whole mentoring program around this and talked about it in depth, that we will start seeing these recessions occur, which will be very quick to happen and very quick to overcome. And I think we're starting to see a pattern here, right? A pattern of, massive inflation, cost of goods going up everywhere. If electricity prices rise, well, then that means that the cost of goods that someone's going to produce for someone is going to rise as well. So we've got the early stages of hyperinflation. So should you be fearful of these things that I'm about to talk about and I have been talking about, I'm excited, right? Because it's a mathematical equation and there's no way out of this apart from hyperinflation. This is their attempt to try and stop hyperinflation, but it's going to cause a massive recession and end into a depression if they don't turn it back turn the course of monetary policy around back to that of quantitative easing rather than quantitative tightening. So here's another news article here. Wiped out, horrific claim Australians collapsing construction industry. Construction workers are having mental breakdowns and crying to colleagues and family members as 80% of the building firms are hemorrhaging money. The Australian construction sector is in dire straits, with as much as 80% of building firms hemorrhaging money, according to the industry expert. More than half the established 12,000 construction companies in the country are reportedly trading at a loss, with many on the brink of collapse. And those who work in the industry are having regular mental breakdowns and crying to colleagues and family members to pursue to survive mounts, pressure to survive mounts. Building firms are losing large amounts of money. Russ Stevens, the co-founder of Australian Association of Professional Builders, APB, told News.com on Sunday. 80% of builders in Australia have lost money in the last 12 months. That's horrific. Around 50% of building companies in Australia are currently experiencing negative equity. About 25 to 30% of these companies can't pay their bills on time. A company is considered to have negative equity if it moves more than it has in assets, with more than one creditor. So here we are looking at the builders collapsing, right? 19. Actually did a series on YouTube called Raw and Uncut. It's a 5-part webinar series, and then that went into a offline mentoring program. The mentoring program was about $8,000, and just recently I just put it out there. If you're one of our buyers agency clients, the investors I look after on a daily basis, which I build their portfolios with, you get access to it for free. So just reach out to my team, get a copy of the Raw and Uncut mentoring program. It's about 100 hours of mentoring. If you are just not a part of my inner circle investors, I'll do it for $299. There'll be a link somewhere around this video, the podcast, whatever. So keep an eye out for that $299 offer for that education series. If we don't have new properties being built, what does that mean? It means the tradies don't have jobs. It means that they can't go and spend money discretionary. It means that they don't have money to go and buy the new Hilux. It means that the guy at the Hilux store doesn't have money to go and buy more furniture. The person at the furniture store doesn't have money to go and buy a nice dinner. And it means that we have deflation happening in the economy. They're trying to stop inflation with the typical old school, measurements they could stop it with. But if we go back and look at other countries that's been experiencing this of recent years, such as Turkey, you'll see that they tried this, it failed, and they had to drop interest rates again to stop a massive depression. I believe that we're, in the early days of this weird little period that we're going through, but the longer that they let interest rates rise, the more pain that they put onto these industries is going to mean that the more stimulus checks and the more, support that they have to bring around later. So the higher the interest rates go means the lower that they're going to have to come. The tighter that they make things, the more stimulus they have to do to fix this problem. So they're going to kill themselves, like the financial sector or the whole economy, by trying to stop a hyperinflationary depression from occurring. So very, very exciting. In my view, that is anyway. Here's an article here from news.com. Energy Minister Chris Bowen warns of a bumpy winter. This one's my favourite one, guys. This one's my favourite one. As energy crisis takes hold, we've got the building industry, we've got energy crisis, we've got food crisis, we've got supply chain crisis, we've got car crisis, we've got house crisis, we've got mortgage crisis, we've got all different types of crises here. Apparently it's because of the Ukraine, it's apparently because of China, it's apparently because of Donald Trump, it's apparently because of all these random events, but no one out there is actually saying it's because you were robbed, your money has been devalued, and this is hyperinflation in its purest form starting. There's actually people in the media talking about hyperinflation now. So, when we first started talking about this 5 years ago, the only way through the depression that we're going to see of the 2019-2020 period, which came, would be to print our way through it. We've printed our way through it, and we haven't even really taken it away. Interest rates haven't even got back to where they were 2 years ago or 3 years ago. Interest rates, they haven't even taken money out of the system that they've printed. They've just left it and not printing more, and we're already seeing everything collapse. Very, very interesting times. Federal Energy Minister Chris Bowen has given a grim outlook that Australians are in for a bumpy winter amid fresh warnings that electricity could rise by 50% over the next 2 years. Look, from all the research that I've been doing, 50% in the next 2 years is very conservative. I think that we'll be seeing 50% by Christmas passed on. As of next month, everybody's electricity bill is going up by 20 to 25%. And what impact will that have, when you go buy your groceries? Woolworths is having to pay more money to have that, electricity covered for. So authorities have essentially blamed a perfect storm of factors contributing to the energy crisis, including Corona, that thing, the war in Ukraine, as coal as driving force behind sky-high prices, pushing the state dangerously close to the brink of mass blackouts. Let me tell you guys, I've got about 100 power bill accounts, right, across multiple different properties of mine, across businesses, across motels, all different electricity accounts. One thing I've realised recently is that, have you ever done a deal with a tradie, right? I've had lots of people, lots of different things I've done over the years, and I've had some crazy tradies that just typically sort of happen sometimes. A trader will come and they go, I did the work today, you must pay me today. And it's like, hang on a fucking second, I haven't even seen the property, right? But let's go and see what you've done. They go, you need to pay me this, you need to pay this, you need to pay this, right? Some people go crazy, right? And generally, how someone behaves about money is a reflection of their personal position, right? If they're desperate, they'll be desperate to you. It will show through how they behave. What I've been realizing is that with these energy companies, it's not just one company, it's across multiple different companies, like 5 different energy providers that we're using, that their accounts team is very desperate in feeling. They're contacting 3 times a day because the bill's not being paid on the day. They're sending you text messages saying, hey, the bill's coming up to be paid. I've heard lots of interesting things out there from people with their energy suppliers. Just think about it. If you're getting weird communication with your energy supplier, is it a cry for desperation because these companies are losing money hand over fist? How did Corona stop electricity from occurring, right? If everyone was in a lockdown, they're saying don't put your fridge on, don't put your aircon on, don't put your heater on, whatever don't put your dishwasher on, right? Wash it yourself. You've just spent 2 years of locking yourself in your house. Everyone around the world spent all this time locking themselves in the property. Wouldn't you have had more TV time at that period? Wouldn't you have had more lights at that period? Wouldn't you have had more heating going on at that period and air conditioners and all that sort of stuff? How come all of a sudden we've got this energy crisis? The only thing that has changed is that coal prices have gone up from $100 to about $400. So we've had a quadruple in the cost of coal, which ultimately coal is what runs the power plants that are out there. Speaking of Sunrise on Sunday, Mr. Bowen said the spiralling energy crisis was a result of a decade of changing energy policies and not enough investment into energy storage and non-renewable energy. This stuff is a joke, right? They are blaming it on politics. The Labor saying it's Liberal fault and all these sort of things. It's a controlled opposition. It's controlled suppression. They're using the something else as a scapegoat constantly. You're constantly seeing, no one's come out and said, it's because coal prices are so high, we're having inflation, we've printed too much money, we're starting to have a collapse of our currency. We'll see it later on, but it'll be too late, and people need to start questioning it, because when a government or a country loses control of its currency, the people uprise and they lose control of their people. The government fails as well as their currency. So don't just expect that our currency is going to fail when you're going into hyperinflation. There's going to be people pitchforking down the street wanting blood for losing everything. And someone that's lost something, has nothing else to lose, will take things to extreme. So interesting times. This week, energy demand was outstripping power generation in New South Wales and South Australia. Supply in Queensland, Tasmania, Victoria appeared to be covering demand. In the old days, summer was the tough period for the energy system because everybody had their air conditioning on. Now you have more solar in the system, pumping energy in the system in the warm months, so the pressure comes on in winter. That's why we need storage, long-term storage. That is the investment all we need. So I said at the start that we would see once we have these in-between periods of massive growth, would have little recessions, and in those recessions they'll try and create infrastructure projects. Here we are seeing a green energy sort of initiative, and I'd expect to see lots of stimulus packages to come out surrounding green energy and in those sort of areas, especially the rhetoric from this new government that we've got in is talking about green energy a lot. So I'd expect to see a lot more of that. Here's another article here, which is on energy. This is from ABC News. Energy economists are calling for change. So what can Queensland do to avoid future blackouts? An energy economist is calling for independent inquiry into Queensland energy production following millions of households being told to conserve their power for a second consecutive night due to generators reducing their output in response to a cap on prices. So this is where the real fun starts. The Australian Energy Market Operator, AEMO, ordered power generators to cover projected electricity supply shortfalls again last night after a perfect storm on energy chaos in Queensland and New South Wales, including cold weather, offline generators and soaring power prices. The morning AEMO said despite forecast supply shortfalls, there was sufficient electricity supplied to meet the consumer demand. There's a part of this article here. This is the part that I want to draw our attention to. Why are some generators being turned off? Because AEMO has set up a fixed price cap for consumers at $300 a megawatt hour. Some generators have withdrawn supply from that market. Green Energy Market Directors of Analysis, Tristan Eders, said 300 megawatt an hour figure is below the cost of fuel for many gas power plants. They said that they do not want to supply electricity because prices are not enough to cover our costs, so they have drawn their supply. They're effectively switching off from saying, I'm not available to generate. So here we are with an industry body coming out saying that the power plants are not allowed to charge more than $300 per megawatt hour. The problem is that it's costing them $1,100 per megawatt hour due to the inflation of the natural resources that go into to make the power plant run. So we've now got controlled suppression. We've got the government trying to cap hyperinflation within a power plant, but the power plants are now failing because they do not have the ability to provide that power at that price. So where do we see a crack in the system, and where do we see the whole thing implode? It's a very, very interesting time. I've said for the last couple of years to make sure you have food, water, energy, community, and cash flow coming through, and ability to trade as well. And this is a point where we're seeing supply chain issues. We're seeing the issues with food, especially with food, and with our energy and our power. So, for those of you that have prepared, congratulations. For those of you that haven't, there's still a bit of time to get your shit together. Here's another article here. Impossible, huge move to solve the national energy crisis. The Australian energy operators have launched unprecedented action to try and solve an electricity crisis grappling the country. The Australian Energy Market Operator has taken the extraordinary step of suspending the electricity market until further notice. In a market notice posted on Wednesday afternoon, the regulator status said that it had suspended the electricity spot market in New South Wales, Queensland, South Australia, Tasmania and Victoria after it became impossible to operate in accordance with the national electricity rules. It means that AEMO will take control of directing which generators should be switched on and when. Sounds very communist-like, right? They're demanding now that these operators have to open up, even though they cannot afford to pay for the power. So if we take all these things, I'll get back to the article in a second, but if we take all these things into account, right, where are we seeing a crack, right? We've seen all this growth, all this boom, everything. Everyone's now getting concerned because they don't have any access to goods. They have limited ability to purchase supplies out there, raw materials, whatever. Now we've got inflation hitting every segment of the market. Now we've got to try to push interest rates up to say, oh, we better get in line from our 7% inflation down to 2.9% inflation, whatever they're trying to target it at. But reality is we've got on the 1st of July, your power bill is going up by 25% or whatever the case that it's going up. So what my question is what has gone up by 7.5% or whatever it is that they're, or 5.7, whatever the figure is that they're saying inflation is reported at. What is there, what has gone up less than that? Nothing, right? Everything's gone up far greater, including your lettuce, your cabbage, you go to your local Coles and your Woolworths, you see nothing there. They say, oh, it's due to floods, we don't have enough access to this. It's like, no, the transport operators want too much, the farmers need too much. It's not that they want too much, it's that they need too much. They don't want the money at the prices that everyone's willing to pay because the currency is losing all of its value. We've now got the electricity company going broke because they can't afford, let's say that it's running off coal or it's running off gas. We now have a situation where if they buy the commodity and fuel their power plant, the power plant goes broke. If they pass on to the retailer, i.e. the AGLs, the Origins, whatever, their increased price, that retailer goes bankrupt. So someone's going to go bankrupt in this supply chain. And then whatever figures get passed on, does it get passed on to the consumer and it goes up 400% this year, the electricity, or does the power station operator cop all the loss and they go bankrupt? Someone's going to go bankrupt out of this, and then they're going to have to re-stimulate that economy. It is becoming very, very much evident every single day of the week. They're trying to control this by putting in higher interest rates, but reality is how far before everything else starts imploding? We're now seeing, cryptocurrencies crash. We're seeing, stock markets crash. I've got some figures that we'll get to in a moment on this, but every market's starting to get impacted dramatically. I've got here another news article here saying demand for rooftop solar battery surges as eastern states Australian energy prices soar. Demand for batteries linked to rooftop solar panels has soared in the past month amid energy. That's obvious it's going to be happening. You see more and more of these stimulus packages coming out around, putting solar on your roof, you'll get a rebate, whatever the case may be, but that won't be able to solve it. If we have everyone putting solar on the roof, what's going to happen to other commodities such as silver and lithium and, those sort of markets? They're going to go crazy as well. So backing up what I've been saying, we've got explosions happening and landmines happening in every part of the economy. Here's an article from ABC News. This one's a really interesting one. They're all interesting. Rising gas prices have been blamed as Advanced Bricks says oven will go cold after 82 years. The brick manufacturing plant is not making bricks anymore because it is too expensive to make the bricks. This is a complete and utter collapse of our Western society as we know it. It's a collapse of our currency. It's a collapse of all the infrastructure. If it wasn't about money, these guys would have been making bricks. They can't because the power stations require too much energy. The power stations need the higher prices for the energy because the cost of the commodities is rising. It's all because we've got a destabilized currency that we're using, which is our dollar, which is the crash of our currency. We have one more big boom in this cycle. We've experienced high inflation. This is not hyperinflation we're at. This is just the telltale signs. When I talked about this 5 years ago, people used to write on the bottom of my videos, stop doing drugs, Nathan, you're off your head, this is never going to happen, I'm going to unsubscribe because you're a dickhead, whatever the case may be. But here we are, and now we're entering into a phase that everyone's uncomfortable by, and a lot of people weren't prepared for. A lot of people are very excited by this, a lot of people are taking advantage of the market. I've never been more excited or happy than where I am today with the opportunities that are out there. It is concerning seeing all the people I care about, all the people I love are going to be in lots of problems because they didn't prepare as well. So, it does put a lot of pressure on all of us. We all get impacted in one way, shape or form, but there is going to be massive winners out of this, and there's going to be massive losers. Here we are, just a simple thing as far as if we take all these articles that we've looked at and overlap them with each other, we've got a housing construction boom, which is blowing up, right? Why did we have a construction boom happen? Because everyone was given stimulus checks with cheap currency. Now we've got all the tradies losing their jobs, all the businesses folding because they can't get access to cheap materials. We've got the brick company saying we're going to go bankrupt and we're closing our brick manufacturing plant down because electricity prices are too high. Everybody's problem with their businesses folding is not because we've got a depression and no one's wanting to spend money. It's that everybody's spending so much fucking money, the velocity of money is starting to ramp up, and money has no value. People have no respect for the money, they don't want the money, and they can't afford it because they need more money to buy their same goods. So the brick industry is causing problem with the construction industry, and the brick industry's problem is caused because of the electricity companies because they can't afford the energy to make the bricks. See the cycle occurring? This is many different markets. All these segments fit into each other. We're either going to have the biggest depression the world has ever seen. We're going to have a depression no matter what. It's just, is it going to be a massive deflationary depression now, or is it going to be a hyperinflationary depression where all the value of your currency disappears? I think the writing is on the wall for a hyperinflation. And this one really takes the cake, right? All the news articles out there really have no fucking idea what they're writing about. Well, they do, but it's more like clickbait. ABC News. Under the science section, we have cryptocurrency prices crash as a result of inflation, as investors lose their life savings. Let's just go back, right? A price crash would be called deflation. A price increase would be inflation. So if we had inflation occurring, the Bitcoin price would rise, not crash. We've got deflation here. So the articles are now saying because of inflation, Bitcoin is falling in price. Let's just have a little bit of a read through some of this. Over 5 years of fly-in, fly-out mining work in far north Queensland, Joel had saved up most enough to buy a first home deposit. Then about 6 months ago, the price of Bitcoin began a long decline. Now he's lost most of his savings, and this week his luck has even got even worse. The company that manages his cryptocurrency exchange for rewards has frozen withdrawals for all of its customers, meaning that Joel can't even access any of his money. Before the prices dropped, it started looking like a house, the 24-year-old electrician said. Joel is one of many Australians whose financial fate will be decided on over the next few days after the price of Bitcoin plunged by about 30% in the past week, shaking confidence and raising fears of further declines. On popular Australian cryptocurrency Facebook groups, moderators have posted links to counselling hotlines. There's a lot of distressed people, blah, blah. What is causing the fall? Inflation, said Chris Berg, the co-director of RMIT's Blockchain Innovation Hub. All right, so we've got a guy at RMIT that's probably never had a job in his life, never had a business in his life, commenting that inflation is causing deflation, right? The price is falling because it's getting deflated, but he's saying that inflation is causing the cost, right? Doesn't really make sense. Central banks around the world increasing interest rates to combat inflation has led to investors pulling out of what is called risk assets, or assets with high degree of private volatility. Crypto is the ultimate risk asset. It's the first to fall. Look, there is some truth in there, but reality is when we look at if someone has money in crypto, let's just think about it this way. You have a kid or you have family feed or whatever the case may be. You have a Bitcoin at 90 grand and you have the option going, okay, I can only afford a lettuce to feed my family or the nappies to put on the kid, right? These are the decisions that families are having due to massive inflation. They go, okay, well, we need to get liquidity coming back through. Why are we having a liquidity crisis at the moment? It's because they turned the lights on, the music had stopped, and then everyone went to sit on a chair, but there was no chairs left in the room. The seats have been removed because all of the stimulus packages have gone for the last 2 years. The only reason why Bitcoin ever got to $90,000 was because they printed trillions and trillions and trillions and trillions of dollars at 0% interest rates, or very close to 0% interest rates globally, and printed so many tens of trillions of dollars worth of stimulus packages for people to get free money, basically. People were getting $900 from the government, they put it into a bit of crypto. They're buying a little bit of something. Their house has gone up in value from $500,000 to $1 million. It was $500,000 in equity. And I know a lot of people, and I don't mean to be a dick about this because a lot of people are hurting. I know, because I've been caught in crypto bubbles like this beforehand. And I think that it'll all recover, but it'll only recover when monetary policy changes. Monetary policy changed, you've got stock markets crashing, you've got crypto markets crashing, you've got every single market, even property markets out there are getting impacted. But the thing is that people are looking for A, cash flow or return, and B, for an asset which will provide that sort of cash flow. People don't have access to liquidity at the moment, so there's a lot of fearful souls out there. People were pulling out 200 grand equity from their house and buying some crypto thinking it's going to go up forever, buying into a hope, a dream, and just like these guys here. Problem is that we've got a change in monetary policy, which is causing all of the markets to crash. If you look at stocks, a lot of the FANG stocks, Facebook, Amazon, Google, Netflix, all that, whether it be other sort of traditional type of stocks, fallen 50% this year. We've got crypto that's come down from 80 grand at the start of the year, whatever it was, down to 30 grand. It's gone down 40, 50, 60% so far this year. And it will keep dropping. These things will keep dropping until they come back with cheap liquidity and a lot more of it. The most important part is when they do come back with a lot of cheap, accessible, fake money as liquidity and inject it into the system, what will happen to everything that's already overvalued? People will be like, I don't want that money. And the velocity of the currency starts ramping up. And at that point, we'll start seeing an even higher level of inflation, but the central banks around the world will be now stuck with the decision. Do we keep increasing the interest rates and cause a massive depression, or do we keep the interest rates lower and put more stimulus into the market and it just causes a hyperinflation? They've shown their hand many, many times over, to what they will do. I'm still very, very confident on hyperinflation, and we're seeing the early stages of that today. My personal views, and this is no financial advice as to what I'm about to say, from my guidance and my thoughts here, because I'm just some crazy guy on the internet talking about his views of the world, which can sometimes sound very out there and whacked up. But my view is that we will start seeing a lot more companies go bankrupt. Actually, there's another one here talking about companies go bankrupt. Domestic cosmetic giant Revlon files for bankruptcy after almost 90 years of business. Revlon has gone bankrupt. Well, it's in a Chapter 11 bankruptcy, which is administrators called, basically. We're going to see a lot of companies go bankrupt, right? If they keep pushing these rates and removing the stimulus, it's not your property market that you need to be worried about. It's that you probably won't have a job to turn up to because your business that you work for will go bankrupt. There's so many zombie companies. If you remember the word zombie companies from back in March 2020, I talked about all these companies in the market which were zombie companies. They needed to have liquidity put in them or they would have died. So the last 2 years we've seen a big party. I imagine a alcohol-fueled orgy of stimulus packages being thrown out in the financial sector. We've seen stimulus being printed and injected into all different markets. These zombie companies just moved on and looked like they were business as usual. However, when they removed the IV drip to them, they're blown up. And we're only at the very early days of that yet. It is only 2 months in. A lot of you might have only paid your first mortgage this month with a bit of a higher interest rate. It hasn't stung a lot of people yet, but you will start to see these things adding up. So when you think about the household budget, we're faced with, let's say someone was on $1,000 per week before. Yes, they might be on $1,200 a week now. However, your petrol's gone up from $50 a tank to $140 a tank. Your food bill has gone up from $200 to $400 a week. Your electricity cost has gone up from, $500 a quarter to $1,200 a quarter. These increases in everybody's day-to-day life, it's literally going to become the decision between, do you buy the nappies or do you buy the formula for a child? Do you, put money in the car for petrol or put clothes on your spouse's back? They're the decisions most families are going to be making out of this, and this is due to the fact that their money is buying them nothing. If you add in there a higher cost of expense being your house, that's either going to cause a massive crash, it's going to stop other forms of liquidity, access to liquidity, and it will cause massive deflation. This cycle that we have will last a maximum of 24 months, in my opinion, no financial advice, and probably stick around for the next 12 months. So get used to it. It was never going to be easy getting through hyperinflation. The least of my concern would be a high interest rate at this point for everybody watching. Just understand that. It's not about the interest rate that'll kill people. I'd be more concerned about your money, you working for a month and then you're earning $1 million for the month and you're not being able to buy six eggs to feed your family, right, for a month worth of salary. When we completely lose our currency, that's where the ugly parts become. Make sure that you protect yourself throughout this period. A lot of exciting opportunities out there. I'm very excited. There's lots of info and data here to go through and to share. But yeah, make sure that you are prepared. Make sure you have access to food, water, electricity, a community of people that you can trade and barter with without a monetary system that's attached, and make sure that you have access to assets that will go up with inflation, but also generate an income that will go up with inflation. That's why I like property, because the debt becomes relevant with inflation. I talked about crypto there. I actually sold out a lot of my crypto because I needed to, because I was buying cash flowing assets, and I sort of had a bit of a feeling that the crypto market was at a top point. How low will it go? I don't want to speculate on that. I've got my targets of when I want to get in, and I will be picking up a shitload more crypto when prices are low, because when we get hyperinflation, literally we've seen these markets with a little turn of navigation of the financial system with the central banks around the world, we've seen these markets blow up already. So we know that they get rapid levels of inflation. Like a property price, you ain't seeing it go up like crypto. People are very much like, oh, Bitcoin, it's the best thing in the world. It's gone up 20 times in the last year. My property didn't go up by that. Okay, well, they're not so optimistic about it now. It has big swings, right? Property is not sexy, it's not flash, but the fundamentals are very strong. But there's lots of assets that you can be could be investing yourself into. The worst investment that I think anyone could have right now is currency. If you had $1,000 last year using Australian dollars, you could have bought probably double the amount of the electricity that you could pull from your power point last year. If you had $1,000 last year, you could get double the amount of petrol in your car. If you had $1,000 last year, you could have bought 5 times the amount of lettuces that you could with that money. So your money is losing its value at a rapid rate. A lot of people go to that as a safe haven. As people start realizing that cash is trash, that's where the real fun happens, and we can see these things that we're seeing, but on steroids. We're like 1% of the way through the hyperinflation at this point, and there will be different waves and cycles as we go through there. Don't be fooled. Have a good solid plan. If you need help with that, you can reach out to us at the office, 1300 367 925. Email my team at admin@binvested.com.au, and you can always listen to us here at Google Play, Apple Play, and Spotify. And make sure that you go over to our Facebook channel at facebook.com/binvested.com.au, where I do my Tuesday Out Lives and going through these articles on a weekly basis. This is the first time I've done a podcast version of heaps of news articles, so it was a little bit weird for me today on that front. Normally I'm doing a live and interacting with everyone, but as much information I can share with you guys to be able to protect yourself, take advantage of this time, the better. So thanks for watching, and we'll catch up soon. Have a great day. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar about to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you've been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. They all telling lies, I know what they been telling you. I'm the opposite of Donald Trump of Australia. It's amazing, there for the taking, my time is never wasted.